In this podcast episode, Peter Schiff shares his insights on the current economic turmoil facing the United States, the future of the dollar, and the implications for investors worldwide. He delves into the shortcomings of Bitcoin as a store of value compared to gold, critiques government policies on inflation and spending, examines his own investment strategies, and discusses the broader shifts in the global economy. Schiff also touches on personal topics, such as his family's experiences and his past political ambitions, while offering advice on work ethic and the principles of capitalism. Peter Schiff argues that the United States is living beyond its means, relying heavily on the rest of the world to finance debt and consumption. Contrary to popular rhetoric, including that of former President Trump, Schiff asserts that America has been ripping off the world, not vice versa. The global community is growing tired of subsidizing the U.S. economy, particularly through holding dollar reserves. Schiff believes the dollar crisis has already begun, as indicated by soaring gold prices. He cites $5,000 an ounce as a milestone, suggesting a loss of confidence in the dollar. He foresees the dollar's decline accelerating, with foreign central banks preferring gold or their own currencies to dollar assets, even sacrificing interest income by dumping U.S. debt. This shift will have drastic consequences for the U.S. economy, which depends on its reserve currency status to run massive trade deficits. As global demand for dollars falters, imports and credit availability will dry up, leading to job losses in sectors like retail and transportation that rely on imports. Schiff predicts an economic boom outside the U.S. as emerging markets benefit from capital recycling, while Americans experience higher prices, interest rates, and a reduced standard of living. Schiff is a vocal gold bull, but highly critical of Bitcoin. While he acknowledges Bitcoin's technological innovation and early enthusiasm, he believes it lacks intrinsic value, which gold inherently possesses due to its physical properties and industrial uses. Gold has served as a stable store of value for thousands of years, resisting decay and maintaining utility, whereas Bitcoin is nothing and derives value merely from speculative demand. He asserts that Bitcoin's price is driven solely by the greater fool theory. Buyers hope to find others willing to pay more for an asset with no cash flow, dividends, or inherent utility. In contrast, gold enjoys real demand from central banks, industry, and investors as a hedge against inflation and currency debasement. Schiff points out that tokenized gold could undermine Bitcoin's narrative, as it combines blockchain efficiency with actual gold backing, providing a more logical and valuable digital asset. Schiff further critiques the commercialization of Bitcoin, noting how early ideals of decentralization and self-sovereignty have been co-opted by Wall Street and corporate interests. Companies like MicroStrategy and public figures such as Michael Saylor, who have aggressively promoted Bitcoin, are portrayed as either misguided or fraudulent in Schiff's eyes. According to him, most recent Bitcoin investors would have been better off owning gold or other real assets over the past few years. Schiff discusses political influences on the economy, expressing disappointment in both major parties. He highlights the failure of Republicans, including Trump's administration, to curb government spending despite promises. The national debt ballooned under Trump with increasing deficits, tax cuts, and an unwillingness to address entitlement reforms. He also critiques Trump's trade policies and rhetoric, which he believes accelerated global rejection of the dollar. Tariffs disrupted trade flows, hurting American consumers and forcing other countries to find alternative trading partners. Schiff recalls the alarm triggered by Trump's talk of invading Greenland, which damaged the U.S.'s image as a responsible global power and contributed to the desire among other nations to de-dollarize. Regarding current inflation dynamics, Schiff insists inflation is fundamentally about money supply expansion and credit growth rather than just rising prices. While official statistics may show a slight cooling, underlying inflationary pressures remain strong due to ongoing Federal Reserve balance sheet expansion, credit easing, and government stimulus programs. Schiff stresses that the inflation Americans experience results from government and central bank policies that continuously expand the money supply. He argues that while capitalism naturally drives prices down through productivity and abundance, Government intervention in the form of monetary inflation offsets these gains, causing prices to rise or at best stall. Interest rates are held artificially low by the Fed to sustain excessive government spending and debt levels, but this creates deep imbalances. Schiff explains that higher interest rates would discourage borrowing, promote saving, and restore healthier capital investment. However, political and financial elites resist rate hikes because they increase the cost of servicing huge debt burdens. He warns that inflation is a hidden tax that benefits wealthy asset owners at the expense of the broader population. This structural dependency on deficit spending and low rates means inflation cannot be easily tamed without a painful reset, which Schiff believes is inevitable. The coming crisis will force sharp spending cuts across entitlement programs and government sectors to stabilize the debt. While Schiff acknowledges Bitcoin's meteoric rise in the past, he firmly believes its bubble is deflating. Price drops below former peaks and the entrance of institutional and government investors contradict early decentralized ideals. He foresees more people exiting Bitcoin before a possible collapse. He accuses figures like Michael Saylor of promoting Bitcoin aggressively while knowingly misleading investors and inflating company stock prices. Schiff expects legal repercussions once the bubble bursts, as many retail and institutional players will seek to recover losses through lawsuits, exposing the crypto realm's faults and fraudulent practices. Schiff emphasizes that the cryptocurrency industry wastes capital and resources that could be better used in productive sectors of the economy. He also expresses concern about government picking winners and losers by promoting crypto ventures, which distorts markets and spreads risk further. Schiff endorses tokenized gold as the future of digital assets, blending blockchain advantages with real-world precious metal ownership. Companies like Tether pivoting to gold-backed tokens and Schiff's own ventures like T-Gold showcase the practical benefits of this approach, including easy transfer of gold ownership without physically moving the metal. He sees tokenized gold outperforming stablecoins and cryptocurrencies because it derives value from actual gold holdings and utility. This model better satisfies investors' desire for inflation protection and trustworthy collateral, which Bitcoin fundamentally cannot provide. Schiff shares personal details, including his Puerto Rican residency, which benefits from favorable tax policies. He discusses his son's past involvement with Bitcoin and current interest in AI, highlighting generational differences in economic outlook and technology enthusiasm. Although his son made some profits on crypto, Schiff notes he has moved on, seeing AI's prospects for productivity gains as more critical. Schiff reveals the challenges of navigating family and investment views, especially when disagreements arise about risky assets like Bitcoin. He underscores the importance of responsibility and earning one's own money, expressing hope that his children will develop financial independence rather than relying solely on inheritance. Reflecting on his run for U.S. Senate, Schiff candidly admits politics was a challenging and largely unrewarding endeavor for him. His platform focused on halting the growing national debt and forcing government spending cuts, but he failed to secure the nomination. He remains skeptical that such fiscally conservative messages can gain mass electoral support given widespread voter dependence on government programs and promises. However, he acknowledges rising discontent with government overreach may someday create openings for reform-minded candidates. Schiff advocates strongly for limiting government's role, promoting local over federal responsibility in education, infrastructure, and services. He favors private sector solutions, arguing free market capitalism yields better quality and lower costs than government programs, which he sees as inherently inefficient and expensive. A recurring theme is Schiff's emphasis on hard work, personal responsibility, and belief in entrepreneurship as the keys to financial success. He decries entitlement mentalities and political promises of free stuff, which he sees as morally wrong and economically disastrous. Schiff champions capitalism as the most effective system for raising living standards and rewarding innovation. He points out that wealth disparities are justified by differing levels of contribution and productivity. Policies like wealth taxes and income redistribution undermine incentives and ultimately harm everyone. He encourages people to pursue ventures they enjoy, to sustain motivation and work diligently, sharing his own experience of relentless effort in building his business from the ground up. Schiff's current investment approach centers on international diversification, commodity exposure, and precious metals, particularly gold and mining stocks. He believes the ongoing dollar decline and inflationary environment favor these assets and that U.S. stocks remain overvalued, especially tech. Despite recent gains in mining shares, he advises maintaining or increasing exposure as gold prices continue rising. Schiff predicts gold may top $6,000 per ounce soon amid intensifying economic instability. He endorses dividend-paying foreign stocks, emerging markets, and energy stocks to balance portfolios. Schiff encourages investors to prepare for prolonged economic shifts, warning that replica strategies from the pre-crisis era are unlikely to succeed. Although cautious, Schiff recognizes the potential for AI to boost productivity and create deflationary forces in the long term. However, he is skeptical about rapid adoption timelines and stresses that inflation control depends primarily on monetary policy, not technology alone. He contemplates a far future scenario where abundance and advanced technology eliminate scarcity, possibly altering the very nature of value and economic exchange. Yet, he emphasizes the importance of incremental progress and realistic expectations in the near term. Schiff maintains privacy about his personal net worth, estimating it in the hundreds of millions, but avoiding public disclosure to protect his family and maintain normalcy. He measures success not only by financial accumulation, but by educating and influencing others positively regarding economics and freedom. While not yet a billionaire, Schiff aspires to grow his wealth commensurate with his worldview and market outcomes. He takes satisfaction in mentoring others and shaping economic discourse more than in wealth alone. Throughout the conversation, Schiff encourages viewers to work hard, believe in themselves, and engage deeply with their chosen pursuits. He stresses that financial freedom and prosperity come from effort, perseverance, and learning. He cautions against quick fixes, scams, or speculative bubbles, urging disciplined, informed investing rooted in sound economic principles. Upholding capitalism and minimizing government intervention remain core to his philosophy for a prosperous future.